Thisha uDlamini lo khuluma nani njengamanje topic yethu namhlanje is financial indicators. Ama highlights nje lawa amajupana. You can interact with us on Itala Aid platform, or you can also download the Mobi app on Google Play Store so that you can get more lesson and able to interact with us and ask questions. Our topic for today, as I said, is financial indicators, the ratios. Let's just go straight on the ratios. Unama ratios okuthiwa ama profitability and efficiency ratio, right? So we have the group called profitability and efficiency ratio, right? These ratios awana stress ilawa azisho wona nje wona ngokwawo straight. So the first one is percentage gross profit on sales. Percentage gross profit on sales, right? The formula here is very simple. It's gross profit divided by sales. Remember, another term for the sales, we call it turnover, times by 100 over 1. So the answer is equal to 100%. So, or turnover, right? Another name for the sales. And then another one is gross profit on cost of sales. Percentage gross profit on cost of sales, right? So the formula is gross profit divided by cost of sales times by 100 over 1. So we're calculating percentages here. So three izinto ofanele uzazi mfundi uma calculate ama ratios. You must know the formula. You'll be given the formula, by the way, but it's very important also ufune uyazi nawe formula ngokwakho. Ufune wazi formula mawukhalisa ama ratio, wazi ukuthi ama figures wathatha kephi, then wazi nanokuthi yini oyicalculateayo, is it days, is it percentages, is it cents, right? So you get the answer in percentages. And then another one, percentage operating profit on sales or on turnover, right? So you take the figure of the operating profit as your numerator, operating profit divided by sales times by 100 over 1 is equal to the percent. Then another one, it's operating expenses on sales. Operating expenses on sales, right? The formula, you take the figure of the operating expenses over the sales or turnover, right? Remember, another term for the sales, it's turnover times by 100 over 1. You get the answer there. So that is number 4, sorry. Then number 5, the last one under this group is net profit on sales. Net profit on sales, right? So here you take the figure of the net profit divided by sales or turnover, another name for the sales. Remember, turnover. Times again 100 over 1. Uthole answer yakho lapha mfundi. That's how you can calculate this sales. Okay, so if ubuzwe equation ibuzwa nge-profitability and efficiency ratios, these are the ratios. Lawa awadingena nokuthi uwacreme noma uwadadishe vele i-ratio zisho yona ngokwani. Okay, ase lawa ke abathanda ukuthi babuze ke ngempela ke okuthiwa yini liquidity ratio. Then group number 2 we call it liquidity ratio. Liquidity ratio or ratios, right? Firstly, you must know what is the meaning of the liquidity. Occurs whereby the business is having the problem in a short run. Occurs whereby the business is having problem or have challenges or problems in a short run. Right, number 1. Remember lama ratio kade besiwenza ekuqaleni we-profitability and efficiency ratio. Wonke lama ratios lawa ama-figures akhona uzowathatha kwi-income statement. If awuyinikezwanga income statement izobe ikhona information that is, that you are given kwi-question paper, but normally it's a income statement, all these figures, right? Or you'll be given on the information. Okay, now lawa ekwenza manje profitability and efficiency ratio wathatha from the balance sheet. Okay, so number 1, eyokuqala current ratio. Okay, current ratio. The formula here, the current assets, right, is to current liability. So thina sibala ini i-prefix, the answer is 1. Okay, so sithola i-answer yethu ngala, maybe it's 2:1, right? Then esibili i-ratio, acid test ratio. Acid test ratio. Lalela ke mfundi, awu 6 lama ratio lawa in total we liquidity ratio. Kodwa ahamba in pairs, which means kahle kahle nje kufuneka wazi only 3. Okay, because lawa awu-2 they are friends. Right, formula ya la ithi current assets minus inventory is to current liability. So the answer nakhona la ubala only i-prefix, i-suffix is 1. Mhlambe here 1,5 is to 1. Right, who's the AS3 on the same group? AS3 stock turnover rate. Stock turnover rate. Right, so sithela amabili angabangani bese kuza manje ini i-stock turnover rate. So i-formula yakhona it's cost of sales divided by average stock. Average stock. Right, so this figure we get it from the income statement or from the information, right? So now you record your figure of your cost of sales, taking, and then the average stock, which means the stock of last year, trading stock of last year, 2022 ngiyalinganisa mhlawumbe sine figure yakhona la, plus 2023 another stock sa this year, you divide by 2. So your answer, you have trading, cost of sales as a numerator. You are adding now the stocks are last year plus SR this year, right? You divide by 2, you get your answer. So your answer is something time, right? So you are calculating isikhathi, right? So that is ratio is 3 under liquidity ratio, right? Then meaning say you a current ratio, acid test ratio, right? Stock turnover rate. Then who's the ratio is 4 under this group, right? The fourth one, stock, a rate of stock turnover. So sibiza yini stock holding period. Stock holding period. Right? Okay, sesiya compare ke manje sithe ngoba angabangani lama ratio la. Right? Ngisho nansi yokuqala sithe stock turnover rate, cost of sales divided by average stock. Lapha it's an opposite. Average stock, la denominator was the average, la numerator kuzoba the average. Average stock divided by cost of sales. Umehluko nje la usuthatha ngo 365 days. Right? So you get now your answer. Remember, the average stock 2022 stock, trading stock, and then 2023 stocks are this year. We have add that divide them on 2, the average lay, right? Divide by the cost of sales. We times them on 365 days, divide by 1. So your answer will be something days. Very important. Ukuthi yini oyibala into ebalekile uma ukhaletha i-ratio mfundi kufuneke wazi ukuthi i-formula ye-ratio ukuthi ibelonga kuyiphi i-group, right? Remember now says that ama-ratios under i-liquidity ratio, right? Wazi futhi nanokuthi ama-figures wathatha amini kuyiphi khona, right? Nanokuthi yini le oyi-calculator, right? So these two are friends. These two abangani lawa can see ukuthi they are similar. Then bese kuza ke the last two, right? Number 5, right? Under the same group, right? Under the same group, debtors collection period. Debtors collection period or schedule, right? Remember, our debtors abantu abasikweletayo, so we have to collect from them. That's why we call it debtors collection period, right? So i-formula yala average debtors divide by credit sale, right? Times by 365 over 1. So the answer here is something days. Remember, the average my debtors were last year, I can say 2022 plus my debtors are this year 2023. So I add whatever them 2 because out 2. If something like we're dealing with 3 years, you add it. 3, we divide them by 3. If you are dealing with 4 years, the average would come to divide it by 4. Divide by credit sales. You'll be given credit sales times by 365 over 1. Then you'll get your answer in days. Very important, right? Remember, if you got credit sales, sometimes uzonikezwa maybe total sales. Yabo mhlawumbe ngeke bakunikeze ifigure straightforward, maybe bazokuneza kanje ku information, mhlawumbe bathi sales bese bethi in brackets bethi 60% is for cash, yabo, maybe bathi 15,000, yabo. So which means from this 15,000, so which means 40% wala ubani credit sales, because you can see from this total sales, which means 40% ubani credit sales. So okay, I'll just calculate ubani 40% wala. So let's say 15,000, sorry, say 15,000 times by 40%. So you get to 6,000. So which means la soba no 6,000, because we are given a total sales got 15,000 in bracket to 60% is for cash. Of which the formula ifuna ini ama credit sales. Which will never kuneze ibe straightforward kwesinye isikhathi lo figure leyo. Then again sesicalculate ayogcina eyomngani what this one, the debtors collection, right? The creditors payment, Okay, let's go to the creditors payment. So we have the sixth one now. Creditors payment. Creditors payment period or schedule. Remember, creditors abantu abasidayisele ngesikweletu, so we have to pay them. That's why it's creditors payment. Creditors. So the formula yala, it's average creditors divided by credit purchases times by 365 over 1. Now, remember the average, let's say 2022 creditors figure plus the creditors there last year 2023. Yeah, add the figures now with 2, divide them with 2, then we divide by credit purchases. Now, credit purchases you can be given total purchases with a percentage. So times by 365 over 1. So your answer is something days. Right. So again, credit purchases nakhona maybe ungafike ubhalwe kanje kuthiwa purchases, right? In brackets kubhalwe maybe 70% cash, so which means 30% ilo sekufanele umcalculate ke laphana njengoba sicalculate kuma credit sales lapha ku formula yama debtors collection. Okay, then sesiqedile ke manje ne liquidity ratios. Remember nakama ratios are under liquidity eyoqala nansi eyoqala, right? Current ratio, acid test ratio, these ones are friend. Current assets is to current liabilities, something is to 1, right? Sibala thina only ngala siyazi ngala is equal to 1. Then acid test ratio, current assets minus inventory is to current liability, so 1,5 is to 1. Turnover rate, right? Cost of sales divided by average stock, right? You calculate time here, right? Which how fast we are in terms of selling the stock, right? And then who's the in stock holding? It takes us for how long to get rid of the stock, a warehouse, normal, a storeroom, the stock that we are holding, right? So maybe it can be 60 days, whatever days that it takes us, right? And then we're going to come back on the analysis of the ratios. Then we'll be talking about now the outcome, the results. Then the debtors collection, average debtors divided by credit sales, right? The opening, the figure of the trading stock for last year, so of the debtors for last year plus the one of the debtors this year, you divide by 2, right? And then you divide by credit sales, you get your answer there. Then the last one, it's a credit payment, right? Average creditors divided by credit purchases. We are at Alapana times them with 365. You get your answer. Okay, let's go to another group first. Group here. Risk. Noma solvency. Okay, I say we risk. Or okay, I call it solvency before say we risk. Okay, solvency was the opposite. Solvency, the group, right? So the formula yala ithi net solvency, non-current liability. Okay, this is a solvency here, not a this is a solvency. Total assets. Total assets is 2. Total liabilities. That's the formula yakhona. Something is to 1. What is the definition of insolvency? It's an opposite liquidity. Occurs whereby the business is having the challenges or the problem in a long run. That's why we are dealing with all total, right? So occurs whereby the business is having problem in the long run. You can get this question in a multiple choice. The long run, this understanding. right, in the long run. Okay, that is a solvent. Illiquidity occurs whereby the business is having the problem in a short run. So this is the ratio. You are done now with the solvent. Ase manje kui risk ratio, right? Risk ratio. Okay, so we risk ratio, we've got this one. Okay, if formula yala, it is non-current liability is 2 note number 7 plus note number 8. What is note number 7? Grade 12. Yakhumbula last week is sakufunda lokho. This is ordinary share capital. Ordinary share capital, retained income. So lokhu uma uku-add ko-2 kukuneza ini, kukuneza shareholders equity. So 7 and 8 combined, it's a shareholders equity. Shareholders equity. So with the shareholders equity, or the results of note number 7 plus note number 8 combined is to non-current liability. That is a loan or mortgage bond. So your answer is something is to 1. So you are done now with what? With a risk ratio. Now let's go to another group of the earnings. Remember, if we are earning, we earn what? We earn money, right? So which means they were calculating cents or rents, right? So let's go to the earnings. Then we'll be doing the returns. That's the last one. So let's go to the earnings. Earnings. These are the ratios. Remember, when you come to the ratios, you can abbreviate negative operation. So the first ratio, we call it EPS. Another one, we call it DPS. Then the third one, we call it NAV, or they call it NAV. Right. Remember, this one, EPS, which means earnings per share. Right? DPS, dividends per share. The NAV, net asset value per share. Right. So what is the formula? Remember, what is common about these three ratios? Very easy. Okay, that's the formula. What is common about these three ratios? Number of shares issued at the end. The denominator. Denominator here is common. Where are we going to get this? Number of shares issued at the end of year. Remember, we start on note number. Normally, we touch on note at the end of note number 7. Note number 7, ordinary share capital. Ordinary share capital. Right? This is common. Now, it's the same thing. Number of shares issued at the end of year, right? Now, the denominator is the same. Number of shares issued, at the end of the year. Okay, that is common about these three ratios. The denominator is the same. It's the same denominator, right? And then you times by 100 over 1. Now you times by 100 over 1. Now you times by 100 over 1. right? The answer is something cents or something rand. You can write to OR as a prefix, or you can write to C for cents or in words. Okay, so now let's go on the numerators now. Okay, what is the numerator for the earnings per share? Remember, as soon as sidayisa a business, as soon as we sell, right? Now we are in auditing now, right? As soon as we sell, right, there's a number one stakeholder of nesimkhokhele, ubani uSARS. So as soon as thola imali, we have to pay uSARS before we earn. We are not going to earn up until we do what? We pay uSARS. So which means the numerator lapha yini is net profit after tax. So here we have net profit after tax. That's your numerator, right? We're not going to earn up until we pay what? uSARS. So a net profit after tax. And therefore, divide by number of shares issued at the end of the year, times by 100, you get your answer in cents. So it can be maybe, let's say, 60 cents. It can be 60 cents. And then we have EDPS. EDPS, it's interim from note number 80 plus final. Interim dividends plus final dividends. Interim, remember, is one of the, okay, another name is paid. The final is declared or recommended. So the numerator now on the NAV is note number 7 plus note number 8. Remember, what is note number 7 and 8? Shareholders' equity, right? So you can say here, shareholders' equity. Shareholders' equity. Then then the last one, returns out two, just returns, right? Iroshi and Erois, right? So we have returns, right? Konoktuaini, Iroshe, then Enye Tuaini, Erois, right? So the full name of this one, it's a return on shareholders' equity. Shareholders' equity. Right? Lapha sithi return on total capital employed. Right. So the denominator here is ifan. So what is common about these two ratios? Right? Denominator, it's what? Here. Note number 7 plus note number 8. Let's say one last year. Average shareholders' equity 2022. Right? You add 7 and 8 to shareholders' equity plus 2023, 7, note number 7 plus note number 80, right? You divide by 2. So shareholders' equity one last year plus shareholders, equity one this year. You times by 100. Remember, in lapha, percentages. So the answer is something percent, right? La nakona 7 and 8. Well, last year, this is 2022, right? Plus non-current liability. It can be a loan or a mortgage loan or mortgage bond. Plus non-current liability. Right? Add a look. Plus, so now, 2023. Right? 7 plus 8 plus non-current liability. Right? Divide by 2. Right? So nakona utamza 100 over 1. So in numerator la okay, in numerator ye Roche, right? In iyafana ne EPS, net profit after tax. Net profit after tax. And then a ROIC is an opposite, net profit before tax, net profit before tax plus interest expense or interest paid. It can be interest on loan or interest on mortgage bond or interest on overdraft, interest on any liability, interest expense. Right. So i-ratio yakho isihlangene ke usothola i-answer yakho la something percentages yabo or percent, right? So we're saying for i-ratio net profit after tax, right, times by 100 over 1, denominator yakho shareholders equity ya last year plus shareholders equity ya this year, which means it's an average shareholders equity. Divide by 2, you get your answer in percentages. ROIC, net profit before tax plus interest, divide by shareholders equity ya last year plus non-current liability of last year. Shareholders equity ya this year plus non-current liability ya this year, then you times up ngo-100 mfundi. Then ke sizophinde siqhubeke ke bese siwa-analyze ama-ratios nanokuthi mapha ama-question ababuzayo ahlale khona njalo nje, mhlawumbe kuthiwa comment on the liquidity position of the business, right? Kuthiwa comment about dividends, returns and earnings, all those things sizokhuluma ngakho ke kwi-lesson yethu ezayo. Sabonga kakhulu ke bafundi, ningakhohlwa ke uhamba lapha nanyo interact nathi kuyithala edu platform, uphinde futhi ni download i-Mobi app lapha na ku Google Play Store, so that nizokwazi ukubuza imibuzo nizophenduleka. Sabonga kakhulu nje, siyafisa ukuthi sinisize ukwazi ukuthi niphumelele umatikuletsheni wenu. Sabonga kakhulu. Thank you so much.